While tax time can be confusing, it's important to take advantage of all the deductions and tax credits for which your business is eligible to save money. Because the tax implications of transportation and food costs can be confusing, today we'll discuss the basics of these deduction opportunities and how to use them to benefit your business. Disclaimer: the information contained here has been prepared by Civitas Strategy's Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategy's Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Today, we'll discuss the kinds of transportation costs that are tax deductible and the best methods to calculate your deduction amount, along with deductible food and meal costs and how to calculate that deduction as well. Transportation costs can be deducted from your taxes if they relate to the regular course of your business, like taking children to and from school, field trips, and trips to buy business-related supplies. To be considered business-related, the primary purpose of eligible trips must be for your business. For example, if you make your regular Costco run to buy bulk supplies for a childcare program, but while you're there you purchase a jar of pickles for your family, that trip is deductible. On the other hand, if you are at the supermarket picking up your family's groceries for the week and you add some wipes for the business to the list, the trip is not deductible because the primary purpose of that trip was to the store for personal reasons. There are two ways to deduct your transportation expenses on your taxes. The standard mileage rate provides a simple cost per mile that is used to calculate your deduction, set by the IRS. The actual expense method uses the cost of your vehicle and travel to calculate your deduction. There are pros and cons to each method. While the standard mileage rate is easier and requires fewer records, your deduction is limited to a set rate per mile, though you can also deduct parking fees and tolls accumulated. The actual expense method may result in a higher deduction, but requires more thorough record keeping. Regardless, both methods require a log of the number of miles driven for business-related reasons. Your records could show the date, distance traveled, destination, and purpose of each trip you record. If you use your vehicle for work and personal reasons, using the actual expense method requires you to multiply the total of your actual expenses by the percentage of miles driven for work. To determine this, you take your mileage log and divide the miles driven for work by the total miles driven in the year. You then multiply your total expenses by this percentage. Here's an example of the calculations using the actual expense method. A home-based childcare provider logged 3,000 miles for business-related purposes. Overall, she drove her car for work and personal reasons for 10,000 miles over the year. She had $6,000 in actual car expenses. First, the provider will divide their miles driven for work, 3,000, by the total miles driven, 10,000, to come up with 0.3 or 30%. She will then multiply her total vehicle expenses by $6,000 by 30% to determine her business use of vehicle deduction, which would be $1,800. Food costs are deductible for your childcare business with two exceptions. First, if your own children are enrolled in your childcare, meals for them are not deductible. Second, if you have employees whose food is provided, their costs are only 50% deductible. There are a couple ways to report food expenses related to your business. The standard meal rate involves keeping track of meal types and numbers and multiplying those totals by a set amount, published annually by the federal government. You may calculate your deduction at a minimum of 1 breakfast, 1 lunch, and 3 snacks per child per day, and each meal has a different reimbursement rate. Using the actual expenses method, you keep track of all food expenses, including receipts. Please note that this method is only available to home-based childcare businesses. Each method has its own pros and cons. While the standard meal rate requires less specific record keeping and allows you to deduct non-reimbursed meals and snacks, you are still required to keep details of each eligible child, including name, dates, and hours of attendance, along with numbers and types of meals served. Though the actual expense method includes all costs, it comes with a greater recording burden, and keeping the necessary records are more time and resource intensive. The Child and Adult Care Food Program, or the CACFP, is a federal program that provides reimbursements for nutritious meals and snacks to eligible children who are enrolled at participating child care programs. If you are a participating CACFP program, you may receive reimbursement from the CACFP. As a business owner, it can be helpful to understand the tax implications of these business expenses in order to fully capitalize on the tax time opportunities presented. However, there are many factors that could affect your business's specific tax situation, so it is always a good idea to seek advice from a professional tax preparer as needed. To learn more about the impact of taxes on your business, browse our additional tax resources on childscare.texas.gov. There, you can also sign up for one-on-one assistance with a business coach.